Hey, this is David for Big Bits, and in this video we're going to take a look at coding with UNIX timestamps in our Python script indicators. And the big indicator that I've created with this is the Bitcoin circulating supply overlay. You can see that here. I believe it's the only circulating supply indicator on TradingView. At least when I search it, that's what it appears to be. So take another look here. Yeah, so it looks like it's the only one that's out there. I think if you search for Bitcoin, there's some similar thing, number of coins. It's not open source though. Uh, and really, I think this is going to be good going forward because it's calculated on the estimated block rewards per day with the estimated upcoming halving date. So it's really cool. I'm going to show you how to do this, but first I want to show you a few different things. This, of course, is the supply over time. This was during the halving period of 50, the initial halving period. The second period was 25 Bitcoin block rewards, and the third was 12 and a half. And I've got this chart pulled up. Where is it? Right here. And it tells you how many Bitcoin were created per block and how many were created during that halving period. This is a really good chart. This is a URL. I definitely recommend you check it out if you're interested in the halving schedule and the effect of the block reward history. But anyway, back to the chart. This, of course, is a circulating supply. I added a few options. I'll go over those really quick. We also have a log reduced supply. You can see that really reduced those numbers and actually put it on a scale similar to the price, and I'll show you how I did that in a little bit as well. And then there's also the market cap, and these actually look a little bit better on log scale because the market cap's in the billions. Yeah, you can see it follows along pretty nicely with the price, but it's also adjusted based on how many coins are actually out on the network being used. And while I've got it on log scale, before I get into the code, I want to show you the log reduced supply. And this actually appears to have done a pretty good job of calling the market top during the last couple of cycles. Now, I will let you know, I don't think this is going to work for a long time because the next log reduced supply after the next halving is 182,000. So, somewhere up here. But if we continue to reduce with this log scale as I have for the past two halvings, then eventually we won't be able to reduce it anymore, and we'll just be multiplying that supply by 1. And since there's a maximum of 21 million coins, that means eventually the price of Bitcoin could get up to 21 million. And that's just absurd to think about, and likely, very, very likely, is not going to happen. So it seems more likely we might have to change the log reduction schedule just a bit off of this tenfold amount in the future. That's something to keep in mind. But let's look at the actual code. That's probably what you came here for. This is a development series. Let me take myself out of the video now so you can see the code. And we are going to be working with timestamps, functions, and of course our string options in our input here. Now, as always, you can find this on my TradingView profile, or as I showed you before, you can just search for it. But let's go ahead and take a look. We've created a few functions. The first is circulating supply, log reduction, and a multiplier. And then we only have one simple line for plot. I left it as a blue line. People can change it however they want to. There's nothing else going on here, so it didn't need to have a special style to it, in my opinion. So for the circulating supply, and this is where a lot of the hard work came into, we had to first determine where we are, like what halving period are we in. So if we are before the Genesis date, which it happens to be today, 11 years ago, that would mean there were no coins circulating. So we would have to return 0. Now, if that is not the current schedule, we are in the first halving period, which is a time greater than January 3rd of 2009 when it started, or greater than or equal to, excuse me, but also less than the very first halving date of November 28, 2012. And I got those dates from this particular picture here. And let's take a look at the reference here, the timestamps. return a UNIX time of the specified date and time. So what we're doing is we're passing into this this function, this timestamp function, a particular date with also, I believe those are hours and minutes, and it converts those into a UNIX time. And if you're not familiar, UNIX time, if I recall correctly, is I think it's like the number of seconds since a certain date in like 1971. It's a really large integer number right now, so it only gets larger and larger, and it doesn't return a typical like data type that you would work with in other languages like C#. So that's something to keep in mind. We're actually working with a very large integer here. So when we call this function and we get our date back, it's actually giving us just one really long number. So we have to account for that. So if we are in this first halving period, which is these numbers back here, and the history for BLX doesn't go back that far, so we don't see it start at 0. We only see it as of the day that their history starts, and the supply was like, let's see, 40. Oh, that's the log reduced supply, excuse me. The supply itself, let's go back here. Something like 4 million had already been generated at that time. So we reduced it by quite a bit to get on the same schedule as we were down here. But the thing we do to get this number of 4 million, first we start off with the end amount from this halving. So we know at the end of the first halving, let me go back to the log reduced supply because it's a lot easier to see when the halvings occur on that chart. The first halving occurs here, and we know at the end of the first halving there should be 10.5 million coins, and that's based on the Bitcoin algorithm for the block rewards, and you can see that's on the chart here. This is how many Bitcoins are rewarded during this particular schedule, and then of course there were 5.2 in the next one, 2.6 in the next one, and 1.3 going forward, and it keeps reducing as the rewards reduce as well. So we start off with the number that we know that we need. Then we get the date of the next halving, and we put it into this timestamp function, which is going to give us a really huge number back, and we divide that by 86,400,000. That's because that's how many units, not Unix, but how many units make up a single day in a Unix time. Like I said, it's a really long integer, so every day worth of time in a Unix timestamp is 86.4 million. So when we divide the timestamp by that amount, we get the number of days in Unix. Then we can subtract the current date using that same timestamp function divided by 86.4 million to get the Unix days, and we can see how far back from the upcoming halving, which we passed in here, we currently are. So if we're only 1 day back, we're just right here, or if we're a couple hundred days back, we're back here. So then, not only do we have to take that into concern, we have to look and we have to add in the rewards over time. So to do that, we multiply that difference that we've gotten, and we've already gotten our difference here, and we know the block rewards that we're getting for this entire first block halving. Then we divide that as it loads. We divide that by the total number of days in the halving period. So we get how many days back we are. All right, so if we're 100 days back, this number would be 100. And then we multiply the entire batch of block rewards during this halving period by the number of days in the halving period. Okay, that gives us the amount of Bitcoin rewarded per day during this particular period. Now we have that number. We have 10.5 million times the daily reward, or well, let's say this. We have the daily reward times the number of days before the next halving. Okay? So we get all the rewards until the next halving, and then we take the amount of coins on the next halving and we subtract the amount of coins that we have left until the next halving, and that's how we get this increasing amount over time. It sounds like a lot, and there's a lot going on this particular line of code, so it can be a bit intimidating if you aren't a very experienced programmer. So not much I can do about that, but if you followed along, you'll see how these things work. And I do want to point this out. Some of you might just skip to this video. This first part here is condition, and then it checks if it's true, and if it is, it returns this value. Otherwise, it'll return the next value in the line. And we just kind of cascade those down at the end of each line. You can see, well, if that wasn't it, then check this. If that's not it, check this. And then, of course, it'll default to nothing, of course, if we are after the next halving date, and that's when I'll have to hard code in a bit more information. Particularly, it's going to be the expected total block rewards and the block rewards per this halving. And once we get that information, we can toss this into this particular indicator and then find the next estimated halving date, and we'll be done. And that's all we really have to do to update the circulating supply over time. Now, I did mention earlier on this could be used. I'm going to bring myself back into the video now. I did mention earlier on this could be used for other cryptocurrencies that we know the halving periods and the reward schedules very clearly. This most likely would be best for, I think Litecoin or other Bitcoin forks like Bitcoin Cash, something like that, where we know the reward schedule ahead of time. We can actually do this, and it doesn't have to be based on the same schedule as Bitcoin. It doesn't have to be a hard fork of Bitcoin. It can be any schedule, as long as we know what it is and how many rewards come per block and how many blocks are or how many rewards are happening per day. So we can really mold this to any if we wanted to. Now, the log reduction is the other function that we came up with, that I came up with, that I used to fit this to a curve. And during the first halving period, this uses the same timestamp kind of functions that it did up here, but the value we're returning is just the multiplier that we're going to apply to the supply. So during the first halving, we wanted to reduce it quite a bit. I mean, the price was really low back then, so it had to be reduced substantially to make it kind of in line with the prices at that time. So on the log scale, it was 5 decimal places, 0.0001 is what we multiplied the supply by. And then during the next halving period, I just multiplied that by 0.001, 0.0001, and then the current halving period 0.001. And I already mentioned during the next one, if I were to apply 0.01, then it would be a line that starts off with 182,000, which, if it happened to align with the prices peaking during the last market phases, that might be the top. But like I mentioned, it probably won't work, just because eventually that would mean the price would equal the supply, and that's just kind of silly to think about. Now, the other function we have is just for the multiplier. So we've returned our circulating supply when we're going to do our plot down here. And we have different modes. So I did an if-else nested branch here. And if the supply is the mode that we're on, we just multiply the circulating supply by itself, or not by itself, but by 1, so it equals itself. And if that's not the case, then if the mode is the log reduced supply, then for the multiplier, we return back the log reduction, which is this function that would return back the multiplier that we're talking about. And clearly I need to update this. We don't want to multiply it by that much in the future. But when that time comes, I'll get around to doing it. And if I don't, please remind me. If you're watching this video in the future and you notice the indicator's broken, please just let me know. But the other one, of course, the last mode is the market cap. And to calculate the market cap at the moment, all you have to do is multiply the current close price on the candle times the estimated supply, and that's the current market cap of Bitcoin. So we took this one indicator and we really turned it into 3 with the different modes. But really a lot of unique things to look at here. The key takeaway, if you're following the series, is how to work with UNIX timestamps and how to compare those. And you'll particularly probably want to pay attention to how I divided it by 86.4 million for a day. Now, if you want to work with smaller amounts, you could probably do that. Like if you wanted to work with 1 minute charts, that might be 60 or 6,000 on this scale. I can't remember exactly, but if you take all the seconds in a day, divide this number by all the seconds in a day, and then you'll get what you should divide it for to see it on a single second scale. So just something to keep in mind, that you can do that. And if you have any questions about this one, because I know it's really confusing and it's really hard to look at with all of these functions within this one line, please leave a comment and let me know that you need something here, or you can reach out to me on Twitter or the Discord or any of that stuff. You can find all the links to that in the description for the video. Now, if you like the video or you like the indicator, please like this video, subscribe, that helps a lot. But you can also check out my TradingView profile. You can see it there. You can like the other scripts that I've got, the other ideas that I've had, and that stuff helps as well. But like I said, if you like this video, please leave it a like. And if you like these types of videos, please like or subscribe to the channel, and you'll get to see more like it. We have a lot of great stuff coming out here. I've got several videos planned and some that are already recorded. So that's all for today. Thank you and have a great day.